Hello and welcome to Lex-Praxis channel. In this series, we're going to be talking about the Nigeria tax reform and what all business owners and entrepreneurs should expect going on in 2026 by reason of these tax reforms. Now, in June 2025, that was earlier this year, that's precisely 26 June 2025, several tax bills were signed into law, and there are primarily four of them, one of which is the Nigeria Tax Act. You also have the Nigeria Tax Administration Act, and you also have the Joint Revenue Board Establishment Act and the Nigeria Revenue Service Act, right? Now, you cannot talk about Nigeria tax reforms without making mention of each of these acts, and I'm going to be briefly explaining what they are all about. The Nigerian Tax Act, for instance, talks about the worth of taxes. So prior to now, we've had several tax laws, um, several acts. For instance, the Personal Income Tax Act, the Stamp Duty Tax Act, um, Value Added Tax Act, and several tax laws that we may not even be aware of. Now, they've been littered all over the place, but what this Nigeria Tax Act does is that it repeals all those various laws that were existing, and it has harmonized them into one tax law, right? So it has categorized the various taxes and basically highlights the taxes that you and I should be paying. That's what that Nigeria tax law is, or Nigeria Tax Act is all about. In summary, it talks about the worth of taxes, right? Then we have the Joint Revenue Board Establishment Act. This is one of this act actually repeals the currently existing joint joint tax board. So prior to now, we have the joint tax board, but what this act does now is that it has replaced the joint tax board with the joint revenue board, and it's also been established as an agency in charge of one of the agencies that is going to be doing one of the tax reforms or some of these reforms, which includes harmonizing and coordinating and settling tax disputes. So one of the things this act does is that it empowers the joint revenue board to resolve harmonize tax disputes and also settle disputes. One key highlight of this act, or the Joint Tax Board Act, is that they are authorized to set up a tax ombudsman, right? So a tax ombudsman is like a sort of panel that will be responsible for entertaining complaints or petitions where it concerns disputes between taxpayers and tax authorities, right? There is also the Tax Appeal Tribunal for taxpayers who want to seek redress in court. Maybe you're dissatisfied with an issue, maybe an assessment that has been given to you, and you need to complain to someone. That is where the tax ombudsman and the tax appeal tribunal comes to play. So apart from coordinating and harmonizing taxes, they also um, they have also been established with the powers to entertain or help taxpayers seek reliefs as it concerns fulfilling their tax obligations, right? Now, we also have, that is the who of taxes, right? You also have the Nigeria Tax Administration Act. This also talks about the how of taxes. Basically, it prescribes how taxes will be collected and accounted for in all three tiers of government. So we have the federal government in Nigeria, the state, and the local government. What this Tax Administration Act is set to do is to coordinate how taxes are going to be remitted across, how they are going to be collected and accounted for across all the three tiers of government. And finally, we have the Nigeria Revenue Service Establishment Act. This is another who of taxes, and this one repeals what we currently know as the Federal Inland Revenue Service with the Nigeria Revenue Service. So from next year, what we're going to be seeing is Nigeria Revenue Service, no more Federal Inland Revenue Service. So they have repealed that agency and replaced it with this one. And the Nigerian Revenue Service is going to be charged with, we are going to be seeing a more modernized and automated or digitized revenue service. Prior to now, if you've been very conversant with the Nigeria tax regime, in the past few years, you would observe that there has actually been initial steps that has been taken when it comes to digitizing the entire tax system. And so what this act is just doing is giving it more powers to go ahead with digitizing. So we are going to see when it comes to tax compliance, filing, remitting of taxes, it's going to be very, very much digitized, right? And so these are the key reforms when you talk about the acts or the laws. It is your understanding of the content of these laws that will give you a clearer picture um, about what to expect when it comes to tax reforms, not just in 2026, but in the coming years, right? So now, in order to explain the implications of these reforms, I think it's important we explain what taxes you are supposed to be paying as a business owner in the first place, right? Now, before I delve into the list of taxes, I want to highlight this. When you study the reforms, you see that the reforms is really not about the taxes to be paying. Yeah, there might have been slight changes in terms of the rates, and certain exemptions have been modified, slight modifications. But the key reform when it comes to these tax acts or tax laws is seen in the area of enforcement and accountability. Now, let me explain. So, prior to now, Nigeria has a lot of tax laws. Like, the problem is not about taxes, there are a lot of taxes to pay, right? But the problem for the government has always been how do we actually collect these taxes, right? How do we um, get these taxes? The authorities have had difficulty capturing taxpayers who are eligible for remitting these taxes and, actually improving their revenue generation when it comes to tax compliance. And so that is what this Nigeria tax reform is all about. So we are going to be seeing more changes in terms of enforcement of this law, right? In terms of, oh, you are supposed to be in the tax system and you are supposed to be actually paying it. Or if you are exempted, you are exempted, right? So that is the reform we are going to be seeing. Now, that being said, let's mention the type of taxes to be paid. Now, before I start listing them out, I'm just going to list 5 common taxes that business owners should be aware of. And with this video, hopefully you'll be able to know what category you fall under. I would advise that if you want to have more a kind of personal information as it concerns your business as to what taxes to be paying, where to pay them, and how to pay them, that you book a consultation with a tax consultant or an expert who can guide you through what taxes to be paying depending on your kind of business. But going on, I will just list the 5 that I have here. So we have the Personal Income Tax Act. This is basically taxes that is charged on income of either an individual, mostly primarily an individual, right? So if you're a director of a company, you're supposed to be remitting income tax because you're going to be paid by the company. If you run a business name, the tax to be paid is personal income tax, and it's charged. You remit it once a year, right? If you're self-employed, you're supposed to be paying personal income taxes. Then you have the company income tax. This is taxes that is charged on companies and it's paid once a year. So in Nigeria, we have limited liability companies, we have public limited companies and the like. So under our law, a company is regarded as a separate legal person, right, capable of doing things that human beings will do. It can own properties, it can sue and be sued in its name. It is also obligated to remit taxes. And so in that capacity, there is company income tax, right? And then you also have value added taxes. This is tax that is charged on transactions in the purchase or sale of goods and services. So if you own a store, you own a consulting firm, and a client pays for a particular service, the VAT, that service that is paid for, if it falls under the VATable category, is liable to remit VAT to the relevant tax authorities. And then you have pay as you earn. This is taxes that is charged on employees of a company. So the dynamics of payee is that, or pay as you earn, is that the employer of that business, or in that business, has an obligation to remit or file taxes on behalf of the employees. So you are more or less like, as an employer, more or less like a tax agent for the government, right? So you get your staffs onboarded and remit their taxes or file as applicable. And then you also have the capital gains tax. Now, this is tax that is charged on assets of the business or individual assets, or financial instruments. So let's say you sell stocks, you sold your stocks and you got some profit, right? You're going to be charged, you're supposed to pay capital gains tax on the transaction. If you sold land, right, and you got money from that transaction, you are supposed to remit capital gains tax on that transaction, whether as a business or as an individual. So I hope I've been able to explain this. These are common scenarios. I mean, every business must sell goods and services, right? Most business have employees, and you earn income, whether you are a civil servant or you are self-employed. This one, you will see, at least from this list, you can identify one or two taxes that you're liable to remit depending on what you do and what um, your business does, right? Now, that being said, let's go to the main gist of this video, which is the implications of the tax reforms in 2026 and even beyond, right? Um, One thing I know as a lawyer is that when new laws come into existence, you don't get to see, yeah, you can see attempts or actions, but you may not see the full picture in 1 year, right? So, legal reform is usually, it could be slow, but definitely it is geared towards achieving a common goal, right, as stated in the laws. So we are going to be seeing what these new tax reforms, these laws have stated, and what we hope to see in 2026 going forward. So one of them is that compliance is no longer going to be an option. I mean, when you consider the digitized services and all, it's going to be difficult for taxpayers or eligible taxpayers to hide or stay away from the tax net. So 2026 going forward, um, if you are if you already have an existing business or you are an eligible taxpayer, just ensure that you put your house in order. If you have intentions of starting a business, please make adequate plans. I mean adequate plans. Just the same way you're making plans for having a physical store or marketing and having revenue. Make plans for compliance, including tax compliance. Make plans for legal and tax compliance. It's very, very, very important, because ignorance of the law is not going to be an excuse for your business going forward. Another thing we're going to be seeing is unstructured businesses. They are going to suffer a lot. Now, when I talk about structure, I'm talking about setting up systems and processes that makes room for compliance, right? Even without your physical inputs. So if you run that kind of business that everything is still rising and falling on you, things cannot happen except you are there and all, and um, compliance cannot take place without because you are the only one who knows all those things. That's going to be a problem. The goal of every business at some point is to have or establish freedom as a founder. And if you are not working towards that, it's going to be a problem. So you need to ensure that compliance is key, even in the structures and systems you are putting in place. Let me give an example. Let's say that in the area of recruitment now, you have realized that you have employees. You now know that as an employer, it is your obligation to remit taxes for your employees, not the employee doing it themselves. What do? You need to make this clear to your employees that, see, as you're coming in, as part of the terms and conditions, we have to remit um, pay as you earn on your behalf. So that's going to be deducted from your salary. Put that in your contract, right? Let that be in your recruitment processes. Also, your pricing. We've talked about value added taxes. You know that 7.5% is the current rate for value added taxes in Nigeria. What you need to do, you may have to start reconsidering your pricing. If you're paying taxes on transactions, if someone is paying for a service or a product, are you, except you want to pay from your own personal pocket? And this is something that has already been there. You go to the supermarket, you buy a product, the VAT is already included in it. So you may need to start, in fact, you need to start considering your price structuring, right? Another thing you need to take note of in terms of general operations, right? Just have contracts, have receipts, create systems that encourages compliance, especially in the area of taxes, right? So please ensure that your business runs independently from yourself. That era of, you're mixing your personal account with your business account and business account with your personal account, it's not going to be very, very good for you. It's not going to be good for you at all from 2026 going forward. So ensure that everything is run the way it ought to be run, independently and separate from you as the founder of that business. The third point is filing and remitting of taxes will be more digitized, right? So there's going to be complete automation of taxes. Um, so that era where the taxpayer comes and tells them that this is what is going to be, is not going to be obtainable anymore. And I'm going to be explaining some of the things, some of the examples of the automations we are going to be seeing going forward, right? Like I said, there's already the tax pro max. Everything is already currently being digitized, but it's going to be much more enhanced and improved as we go forward, right? So there's going to be much transparency with technology coming into the picture. There's going to be much transparency, so you can't just concoct figures in your head and say this is what to do or this is what I have to pay. No, the truth of the matter is that the tax man does not trust you. So they are going to be looking at what the data or technology is telling them and assess you accordingly. So that's it. So you can't just say I am tax exempt because my salary is in the minimum wage bracket, and they will have to check and confirm it, right? So that's what we're going to be seeing going forward. Another thing is there are strict compliance requirements. Tax evasion will be much more expensive. Of course, that makes a lot of sense. Let me give an example. So, if one of the things in terms of tax registration now is that the system has been so designed in a way that you have, let's say you want to set up a company, you have your company incorporated. The next thing you do is that a tax identification number is issued to you. Even at the point of issuance, you still need to activate it. And to have it activated, you have to be onboarded on the tax platform online. Now, it has become mandatory such that you cannot just take that number and go to the bank to open an account. The number will not be active. You'll be required to go make it active. So these are the things, these are practical examples of measures that are already currently put in place to make it difficult for you to hide. And once you're on the platform, you cannot say I don't own a business anymore, I'm not running a business and all that. No, right? So yeah, it's going to be very, very difficult to evade taxes. And evading tax evasion is actually illegal. So don't even have plans of doing that. Another thing is mandatory VAT e-invoicing. Okay, so all registered businesses must adopt e-invoicing and real-time VAT systems um, aligned with the FRS, or will I say the Nigeria Revenue Service technology protocols. So this has already started. So, but it's going to, in the long run, in the long run, more businesses are going to be captured in this e-invoicing, e-VAT invoicing system. So currently, larger companies are currently using that, where what this means is, so let's say you have an automated system or you have a system where you issue invoices to clients to make payments. Now, they are not going to be relying only on your invoices now. They have a platform where you are also going to, the same invoice you are raising, you raise it on their own platform so that it is there on their record. And with that, they can assess how much taxes you're supposed to be paying, either as VAT or income taxes, right? So it's that is one of the ways, and you cannot avoid it. You will not be able to escape it, right? So it has become mandatory, or is going to be mandatory in either in 2026 or in the coming years. Now, there are also changes in personal income tax rate. We are going to be seeing the enforcement of changes in personal income tax rates. So, personal income tax rates now ranges from 0 to 25%, depending on the annual earnings of that individual, right? And individuals earning less than 800,000 naira or less are fully exempted from personal income tax, right? So, yeah, under the current law, people who pay or who earn 800,000 naira annually and below are going to be are going to be exempted from remitting personal income taxes. Uh, that's another implication or development we're going to be seeing going forward. Also, in the area of limited liability companies, small businesses will pay less taxes, while larger businesses will pay large taxes, right? So small companies with annual turnover of 100 million and below will be exempted from remitting company income taxes. So this applies to businesses that are registered as limited liability companies in law, right? So small companies that earn 100 million and below, you are exempted. But from 100 million and above 100 million, you'll be required to pay right 30% company income taxes, right? So, but like I said earlier, or I want to highlight, there's a difference between the exemption. Now, the fact that you are exempted does not mean that you won't file your taxes. No, filing taxes is basically about completing forms, your tax information, to enable the tax authorities assess you and say, okay, you are exempted. Where you do not file your tax returns, you cannot be categorized as an exempted taxpayer, right? So the fact that you are exempted does not mean that, oh, you're not going to have any business to do with the tax authorities. No, that is wrong. You need to get yourself enrolled in the tax system so that you can be assessed and declared as exempted. So the fact that you are exempted does not mean that you do not file, right? So please take note of that as well. And finally, they are going to be seeing enhanced VAT rules. VAT rates remain 7.5% of sales, and essentials like food, education, medical or health care are zero rated. So they have now included zero rated VAT. And then we also have transport, housing as categorized as VAT exempt, right? There is also penalty for late filing of value added tax. The late filing is high and now attracts 100,000 naira as against the previous rate of 50,000 naira. So it's much more expensive um, not to comply. So please, if you're a vatable person, you run a business that is vatable, please ensure that you get enrolled in the system so that they don't come knocking on your door and penalties does not compile. This is one of the things that can drain your business if you're not paying taxes, because VAT is actually charged on your transactions. So please take note of that. So having seen all these changes, at least we've listed up to 8 of them, and these are just summarized because of this video. Yeah, we want to focus on the key points. Now, having taken note of these changes, what should you be doing? What's the way forward in 2026? Now, the first thing, please get yourself tax compliance. Tax compliance is now a must, it's not optional. VAT compliance is now super essential. Like I said, VAT is charged on transactions. Imagine if you have been doing business on a monthly and it's filed on a monthly basis. Imagine if you have been doing this business on a monthly basis and you've not been filing your VAT. The penalty will just keep accumulating, right? And with this digitized system, it's going to be very difficult to even start negotiating these things. So please, if you're a vatable person, please go and enroll in the system. Okay. Now, another thing, please, proper record keeping is a must. when it comes to tax compliance and trying to get the proper assessment of your taxes, you cannot contest a tax assessment from the authorities that you do not have evidence about. So please, in your business dealings, ensure you have evidence. That is where receipts come in. You say you bought generator for your business. Where is the receipt? You said your employees, you are paying them this amount. What is the proof, right? Beyond bank statement, you need much more than that. So please try and keep records. Ensure that your business has records. If you need to get an accountant or a data entry specialist to record these things, please get it done. But please ensure by all means that record keeping is done, right? Stay in touch with your business numbers. Keep evidences of events when the taxman shows up, because they will definitely show up. But when they show up, you cannot afford to stammer at those times. And before 2026 ends, have a one-on-one meeting with the tax consultant to find out your correct exposure and map out your compliance plan, right? So please, if you're looking to start your business in 2026 going forward, or you already have a business, or you are even an individual and you're a salary earner or whatever, and you are feeling overwhelmed with this tax information, please just have a one-on-one session with a tax consultant, and just get this thing clear off your chest, so that you can enter into 2026 with a clean slate and start doing the right things as it concerns tax compliance. So I hope you got value from this video. The purpose of this video was just to highlight the reforms, the key changes in the reforms that you can relate with as a business owner and even an income earner. And I hope that I've been able to do justice to that. If you have any questions as concerns this video, please feel free to leave them in the comment section and we'll respond to you as always. And if you would like to book a consultation with a legal practitioner or a consultant, please, you can send us a private message, right, to book a paid consulting session with either a legal practitioner to advise you on the legal aspects of tax compliance as it concerns your business. Come your way again. This is me saying bye for now.